Hi everyone, welcome to this time scrolling finance. Well, last week China's stocks market performed brilliant, hit 3,800 points, which was the second high point since 2015. Meanwhile, China's bonds market showed some resilience. Crucial terms active bonds have stayed in the key level below. So as always, let's have a quick review of the bonds market, then check out the details part. Alright? Total bond yields curve was upward and flat compared to the week before. Yields of 3, 5, 10, and 30 years terms went up 9.7, 3.7, 3.5, and 3 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 and 5 years terms went up 12 and 4.7 basis points. 10 and 30 years terms went down 13 and 4 basis points. This spread between Chinese treasury bonds and commercial bank perpetual bonds enlarged a little bit, with 5-year spread was 53 basis points. About actions of investment agencies, in last week for short and middle-term bonds, big banks, policy banks, and monetary funds bought 44 billion yuan together. City commercial banks and joint stock banks sold 65 billion yuan together. And for long and ultra-long-term bonds, agricultural commercial banks and city commercial banks bought 27 billion yuan. Whereas funds sold 33 billion yuan together. Next, let's check out details part and see what happened last week. In terms of fundamentals, first and the most important, China's stocks market hit 3,800 points as expected on last Friday. The SSE Composite Index have spent almost 3.5 years wandering in the range of 3,000 to 3,400, then soared 400 points within 3 months. Well, I'm not sure whether there are some bubbles, but the speed was too high to take it as a healthy one, and there wasn't any big adjustment. So the total performance looks like a little bit overheated. Second, the real estate market data came out. The whole picture wasn't good, except the floor space of newly started buildings was minus 19.4%, better than previous one minus 20%. The rest data were all worse than last month. So the situation of the house market still needs to be refined, and that also reflects that the confidence of the economy and the efficient demand needs to be enhanced further. The shadow of the deflation is still out there. We both hope to climb out of the bottom of the recession, and I think we are on the way to it. Third, the Federal Reserve Chairman Jerome Powell turned dovish at the meeting in Jackson Hole, Thinkerson. Some surveys estimate that cuts are on the way. The closest one may come in September, and the other twice may happen in fourth quarter. Talking all, we can conclude that the reality of a weak economy with a little of recession hasn't changed for now, but the outside environment have shown some positive clues. The equity market performs well. The risk assets are more valuable than before, and just as the Federal Reserve starts its cuts act, China's financial products will become more attractive. So from long and ultra-long-term view, the odds of winning is 50% maximum. Maybe there isn't a big adjustment because of weak fundamentals, but the profitable space for bonds is small as well. So now isn't a good time to enlarge our duration. For funding condition, well, it has become tight in the first half week. The financing price for non-banking agencies went up to around 1.5% for overnight. But luckily, though the financing price was high, the liquidity was sufficient. The PBOC totally invested 12.6 billion yuan to the interbank market. So the stance of monetary policy remained loose. And the PBOC announced that it would release 600 billion yuan of MLF on Monday. So the funding condition is good. Thus, from short and middle-term view, the bonds market gets back up from the PBOC as always. It is safer to hold short and middle-term bonds. What should we pay attention next? First is the funding condition. I don't know whether our PBOC follow the path of the American cuts, but since the outlook of the monetary policy of the US will change to dovish, maybe the funding condition won't be a problem in the future, so keep eyes on it. Second, the performance of the stocks market, whether there is gonna be any adjustment. Third, the fundamentals, especially the economic data of third quarter. Let's check out the recovery situation through this. About bond investment strategies, well, now we'd better take a defense stance. Don't enlarge the duration of the portfolio unless the stocks market shows some weakness. For bonds market now, patience is everything, and if you want to get some trading gains badly, you can just wait for long and ultra long term bonds to have a big adjustment, then buy some and sell them real quick. So as always, if you want to know more useful financial information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.